Trade Genius.
What's going on, guys? Philip at Trade Genius. Wanted to give you guys an update before we head into the holiday on Bitcoin and just go over what we've seen over the last couple of days as far as price action, what our buy signals are telling us, and then what we can expect going forward this week. Now, we have a holiday week back to back. We've got Christmas in the middle of the week, and then we've got New Year's in the middle of the week. So as far as most markets, it's pretty choppy trading. The crypto markets are 24/7. And sometimes you'll get some extremely volatile moves on holidays in the US where it's more of a US-centric holiday versus other parts of the world. So just bear in mind, crypto doesn't really take holidays off, and sometimes you can get some really wild moves. That being said, let's take a look at the technicals. This is our delta indicator, and the delta is basically grinding higher, so that's telling us that we should maintain a buy the dip mentality. What we've done, we've had two pulses higher, and we've stalled out. This ran into some resistance over here, stalled out. We actually took a short. So we took a long off of the dip, and then we took profits on that. We reversed, went short off of when this wicked, made this new high. We got short, and this moved down to profits on that. And we're currently positioned long now in the room. So, and if you're interested in joining us, check out our website, and we've got some specials running. And so currently what we're doing is we're pinching between these moving averages. So if we zoom in here, you'll notice that we're above our faster weighted moving average of 20 and our slower weighted moving average of 60. And right in the middle of that is the ever important 200 period moving average. So we're kind of pinching between moving averages. You'll see this sometimes, and things get compressed, and then we usually see a large move out of that. So the technicals, as long as they stay trending up on the futures delta, is going to imply that we will see this will resolve to the upside. We'll take a look at what the market depth looks like in a little bit here. As far as the daily chart, we're in this descending channel, and right now all eyes are on whether or not we can get back over this resistance area here and see if we can reclaim this 50 period moving average here on the daily. If we get above that, then we'll have some clear skies as far as volume nodes go. You'll notice a big volume node here that's going to act as resistance as we get up into that 7,900 level. But once we get above that in 8K, we could see a quick move like we saw up here, quick move to the top of the channel. And I expect to see some short stepping in there if that happens. If we look at our market internals right now, and probably due to the holidays, it's just gotten really flat. So there's not a lot of extreme positioning on either side, either long or short. We saw a brief moment where the premium index actually was pricing in a premium versus a discount when the bars are upside down. And as such, we saw price kind of fall off after that. But we haven't been seeing that premium priced in as of late. It's always been more of the BitMEX index being priced at a discount, but nothing too actionable here. If we look at the order book heat map, you're going to see that we've had bids kind of following the price down as it's made lower lows here. This is an hourly chart. One thing to keep in mind is where orders are, there are some sizes that are just lingering out there. So on the downside, you've got this area here at around 6,900 and also at 6,850. And you keep an eye on when you see these sizes hanging out there by themselves. You also have this condition here where you have this steady order size here at around 7,900 or so, and then also around 8K. This is when you get those wild wicks. We call them scam wicks, where the price goes up, leaves a long wick, and then comes back down, basically runs stops. And you'll see oftentimes it'll hit these levels. So it's good to keep tabs on those levels as far as where they are on the depth chart and how deep some of those moves can go. And again, those are just basically scam moves to run stops. And guys are looking to build liquidity by getting those stops to filling their larger positions because they want to actually counter trend the other way, but they want to fill size. So it's a market maker type strategy. All right, guys, if we take a look at our minor capitulation chart, now we told you we would expect this to last about 2 to 3 weeks. And what we've seen is now we're getting this capitulation to flip, and we've gotten a green light. And so when we get that, that typically gives us a heads up that we could see the hash rates and things like that starting to recover. And usually when that happens, price has put in a bottom and doesn't go any lower. Now, this is only on the daily. So what we want to see next is this confirms by Sunday this is still the case, and the weekly chart also flips up and we get a green dot there as well. If we go back in time, we'll see areas where the last one that we had was once the capitulation was over, the green dot happened. You'll notice that price did not immediately go up, and I actually think that's probably going to be the case this time, but the low was in. And they're really good when you get these green dots when that minor inversion completes its cycle. Whatever low that's been put in is usually the low. If we look back again at 2016, which I said for duration is probably going to be similar, and so far we're kind of tracking that. This went from July 30th and gave us the green light at August 23rd. So that was about a 3-week inversion there. Once that green light fired, again, a little bit of drift down to sideways, but that low was in. If we look at the time before that, now this is an example of when you had an inversion that flipped and then didn't flip. Let's bring the lines back up in here. And if we widen this a little bit so we can see what actually happened. So the inversion was starting to turn up. It actually did turn up and flip back to positive, meaning that the miners were adding hash back to the network. Then it dipped a little bit, probably because price didn't follow through and kept chopping. And then they flipped back up again. And even when this flipped and reconfirmed, price rolled over for a couple of days and then stabilized and then moved up. But usually when you get these signals, the bottoms hold. The bottoms stay in. So that's been the case every time that's happened. And so that's what's important about what we see here, is we've had a pretty decent pullback. We had a bottom and then we came back and retested that, eked out a new low and went higher. That's actually a pretty bullish thing. You like to see those get retested and then move back up. And we're now getting this. So what we could see is a move, something like where we come up, we could test the 88,000 level or so and then roll back over. We also could see this thing roll over, stabilize, come up, test the 8,000, come back down, and then start grinding back up. And then we don't see that until January. So that would be, based on this happening, this low historically would be the low of this pullback. And we're going to see, we could see some chop, but ultimately no more lows, and we start grinding higher after we get through January and get in toward the final run toward halving. It'll be very interesting to see what price does as we get to that. You saw Litecoin did about a 300% run up. Bitcoin obviously is priced higher, so we're probably not going to see that type of percentage gain, but nonetheless, we'll probably see multi-$1,000 moves as we head toward that halving date. So it'll be interesting to see. Speaking of moves toward halving, if we take a look at the cycle repeat graph. Okay, so we've caught back up right where we were supposed to be on the cycle, but if we zoom in, we take a look at what price action is going to be implying happens. Some of these moves actually have been, even though the scaling's off, some of these moves going up and then back down have kind of played out in sync to a degree. So I like to keep an eye on what's going on with the cycle repeat. So this is just basically saying if we repeat the same type of cycle low to cycle high between the halvings, we should see similar price action. So you'll see if we zoom in even closer here that we've come up. Actually, price implies that we come down, pull back, bounce back up, and then push a little bit higher. And so we haven't seen the pullback like it's implying here, but now it's implying that we'd stabilize, go a little bit higher. After January, we pull back one more time, again, the low being in, and then we move higher. So I think you need to be cognizant of this pattern, this fractal playing out after the first of the year, but again, not taking out that low because of the minor inversion flipping back up, unless of course that flips back down and stays down, which would be new. And you have to be open to that happening, because it's not just because it's happened in the past doesn't mean it's exactly going to happen that way. So historically speaking, the lows stay in. But again, after January into February, we start that move up. Keep in mind, May, we have the halving, and the cycle repeat implies that we just grind up, followed by periods of consolidation, grind up. Then after halving is when the fireworks really take off. So I know people are thinking, just like Litecoin, there's going to be a run up, and typically that is what you expect. However, being that this is telling us where we should be in the cycle, really it's saying that we kind of just, after a pullback into January, we would consolidate and grind up, but no real epic runs. And this would probably frustrate a lot of people, but quietly putting in that the low is in. You see how that is? It's kind of sneaky that way, but that's how markets are. And then after the halving, we get a run up. Actually, this would imply right around the halving, it would run up. And so I think the only thing off here would be it's either before or after. I think this move does come into play where we start running back up to 11,000. We probably close that CME gap up there. But it's just going to be a question whether this time happens before or after. It's happened both ways. We've had a pre-halving pump and then a post-halving pump. So this is implying the post-halving pump. All right, guys. Well, that's it for this video. So this week, going forward, to be clear, so what we're seeing on the short-term stuff is really, we're just ranging right now. If we look here, you know, we're going from approximately the 7,200 area, and we're ranging back up to the 7,400 area, basically. So you got like this $200 range that's in play here. Okay, so that's kind of, you know, there's trading techniques for that, but that's probably what we're going to see, a bit of ranging here. But don't fall asleep. We could see some fireworks tomorrow during the holiday. Just keep that in mind. But other than that, what the levels we really want to see hold are the WMA 65, which is right around that 7,200 mark. Really don't want to see any 4-hour closes below that. If we do see a 4-hour close below that, we might just be entering into a real low volatility chop area, and that could go on for a while too, easily through the holidays. But I do think we're probably going to get at least one more gasp of air up before something like that takes place. And then we can kind of gauge and see how things are heading into the weekend from there. All right, guys, that's it for this video. Hope it helps. Please hit like and subscribe. I'll see you on the next video. Take care. Bye-bye.
Trade Genius.